Well, copper has paused after a blistering multi-month rally that saw prices punch above $13,000 a tonne, and this on tight supply and booming electrification demand. But with China's industrial data looking mixed, trade tensions rising, and new AI energy infrastructure deals pulling the market in new directions, the outlook is far from settled. Well, to make sense of the price action and the fundamentals behind it, we're joined by Mackenzie, copper analyst and market reporter at Benchmark. Albert, thanks very much indeed for talking to us.
Thank you very much for having me.
Well, look, copper hit record territory earlier this month before cooling off. I'm curious, what's behind the recent consolidation, and is it merely profit-taking or something deeper?
Yeah, I mean, to be honest, I think the first thing I'll definitely think is the price this morning was still well above 12,000. And in the context of, there's been a number of record-breaking highs. And before November, the highest copper had ever been was 11,000, 11,104, I think. So, even if it is slowed a little bit, and it certainly has flattened a little bit, it's stopped at a very high level. There was some, there were some macroeconomic concerns yesterday, obviously, with the US threatening to tariff a number of nations. Copper is very entwined within the macroeconomic picture. So challenges to that often translate into challenges for copper. But I guess the metals can't go up forever. Prices can't just keep on going up forever. And I would think of it as more as it doesn't necessarily have to have a really specific reason to have slowed down the turn, because it was already sort of higher than people had expected it might have gone.
What are you making of China's industrial demand signals versus broader global growth concerns?
To be honest, if I was the main thing sort of I'm thinking about with China at the moment, or the most important thing, is that these, certainly in terms of copper, there's lots of other things that are part of the picture. But at the moment, we're seeing challenged demand in China because of the high prices. So what you often see with the Chinese copper market is arbitrage trading. So when the price is incredibly high on the LME, or inversely, you sometimes see material flow out of China onto exchanges or onto the global market, and you sometimes see slowing demand in China. And certainly from a number of people we've spoken to, that's already happening. There has been some challenges to Chinese demand on copper because of the high prices. So the high prices are actually already starting to have an impact in China specifically, which is a very price sensitive region in terms of copper.
Now, you spoke about this a little earlier. We're seeing renewed tariff and trade tensions between major blocs. I mean, how material is that for refined copper flows and investor positioning?
So the interesting thing with in the tariff discussion with refined copper is it tends to be precluded from these sort of nation specific tariffs. And it is actually sort of tariffed on its own as it was. And one of the things that's interesting is in the coming days we expect, or quite soon, there could be some signals from the Supreme Court in the US about whether country-specific tariffs are legal. And I think the big thing to watch out for when that news comes is whether that actually compels the US administration to act faster on copper tariffs. So at the moment, there aren't tariffs specifically on copper, refined copper, into the US. But that could change if the ability to tariff other goods is challenged. If Donald Trump can't tariff countries, he might tariff something that the US Supreme Court has already ruled is legal, is these sort of 232 investigations into material specific tariffs. And so those are okay. And so I think there's some market expectation that a copper tariff, which in theory is supposed to sort of come into play in January 27, following an update in June this year, could come in a little bit quicker if those tariffs are reversed. I think the other thing, the main story related to these tariffs is just copper is so entwined within that macro picture. It is a metal that does well when the economy does well, and sometimes you see prices cooling off when there are those concerns. Like if you look at the most clear example of this is how quickly prices fell off after the initial tariff announcement on Liberation Day. Copper prices fell dramatically and then picked up as those trade worries sort of changed. So I think that's the main impact you'd think of at the moment. It's just those macro concerns feeding into demand. Copper is in everything. If there are tariff challenges, if that impacts demand for EVs, if that impacts demand for, or the amount that countries can spend on infrastructure, and all of these sorts of things, it starts eating away at copper demand. And I think that's the sort of main thing to look at.
It's interesting you mentioning demand and where the copper's actually going to. And I got to ask you, you've got copper linked to AI data center buildouts, you've got EV acceleration, as you mentioned, grid upgrades. Albert, which of these new demand stories feel durable and which to you feel overstated?
That's a very good question, because it's something. Certainly, the AI picture is is one that's hard to entirely understand, because not only are we're looking at quite a new technology. It's quite nascent, and a number of things could impact how much copper that sector uses. We saw last year with DeepSeek that sometimes there was a point after that people thought the processing power was lower than they had anticipated. They thought there might be less need for processing power than they had before. But these things, it's a brand new industry, and it could, it could be bigger than people expect. It could be smaller than people expect, and then at each level of that, it could be a bigger industry, and the processing capacity needed could be greater than we currently anticipate, and the copper intensity of that processing capacity could be greater than we expect, and the inverse of all those factors. And because it's so new, it's quite hard to tell. It's very different forecasts from different people. All people see it as growing and see it significant. We're seeing, around 500,000 tons for data centers in this year. The other thing that's actually kind of interesting is, in the grand scheme of the market, 500,000 tons is not huge. It's not world changing, but it's from a very low base. So, if you've been looking at the copper market for the last 5 years, people have already, 4 or 5 years ago, were talking about shortages, talking about how long it takes to bring on supply, and growing demand for electrification, and growing demand for a number of other things. You add into that sort of something that wasn't being forecast until quite recently. It's not massive, but it's from nowhere. I would say, the electrification pitch is also very big. I think lots of that investment's coming from governments, certainly in Europe. When you speak to people who sell things like wire rod, they see the demand as quite stable because it's coming from large government infrastructure projects that has sort of funding already allocated and that sort of thing. So I think they're all big stories in their own way. And yeah, I think to be honest, one of the ones that I think is sort of underlooked at is, less economically developed countries. Their copper consumption per capita is quite low, and as countries become wealthier, more people will consume more copper consuming goods, and that could be a big part of the picture as well.
And then, as we wrap up, I mean, you a trader, you a producer out there. What are you watching next? Is it inventories, project pipelines, elections, or central bank policy?
I would say the biggest thing to look out for, is the tariff situation on cathode specifically. So one of the things that, I do think that the broader kind of, there's a very bullish narrative around copper at the moment. People think it's going into AI, EVs, and they see that supply pipeline as slow and sluggish, and all these sorts of things, and that's long term, and people do believe that. In the most immediate future, and the thing that drove prices up for 2025, was there was a fear of a tariff into the US. The US stated repeatedly that there might be, and that basically created an arbitrage between the CME, the US Metal Exchange, and the LME, which is sort of more globally used. And that pulled a hell of a lot of copper into the US, and it really tightened, back to that inventory question, it tightened up inventories everywhere in the world. It made everyone quite worried about shortness of supply. And that's sort of, I think, and most people I speak to think, a really large part of why copper prices grew so much last year and why they're quite high now. Now, if a tariff comes in, that pull of material changes. You know, people are trying to front load that material, get it in before the tariff, and profit off the difference. If the tariff comes in, that situation is over, and that material then needs to find a different home, and that then can go into the global market. So that could really change copper prices quite quickly.
Well, some interesting insights there. Thanks very much indeed. Enjoyed that conversation. Albert Mackenzie is a copper analyst and market
Thank you very
reporter
much.
at Benchmark. Albert, thanks indeed for your time.
Thank you very much for having me. Really appreciate it.